What's up, everyone? It's Scotty with Money Vesting. So welcome on board for another live stream here. So QQQ ETF down a little bit over 6 basis points. We got the S&P 500 ETF SPY down up a little bit over 36 basis points. And the Dow Jones is up close to 0.5%. So we got the Dow and the S&P 500 pushing higher, but the Nasdaq ETF down close to 9 basis points. It was much higher, but of course, as soon as I went live, this thing QQQ started dropping a little bit. So it's coming, guys. I tell you, like it's all because of the shipping. It's all the chip shortages and semiconductor issues. Supply chain issues. Has anybody heard about those? So yeah, it's been delayed a little bit, but it's getting there. It's definitely coming. So I promise. So let's take a look here on the GDP numbers as well. So thanks for mentioning that. They were supposed to come out today, and FOMC minutes came out yesterday. So we already heard from Jerome Powell and the Fed. They're already moving forward with their aggressive tightening policy. 50 basis point hike is going to be something that they are going to be reporting in the next couple of meetings. So June, July, and then of course September we've got. So all right, let's take a look here. So GDP came in at let's see, and then we'll take a look at corporate profits as well. But GDP came in at an actual decline of negative 1.5%. And the personal consumption expenditures annual rate was at 3.1%. So a little bit higher than the expectations here. And then negative 1.5% for the GDP growth in the first quarter of 2022. And the prior number was 1.4%. Consensus was negative 1.3%. And we actually came in at an actual revised number of negative 1.4%. Now, after tax year-over-year, corporate profits jumped 15.7%. Still a nice growth here, so earnings are still pretty good. But we've got a prior number of 24.8% with inventory consumption adjustments. Year-over-year, we grew by 9.5% for corporate profits. So overall, decent growth here for corporate profits, but definitely seeing a little bit of a pullback in the GDP numbers, actual negative 1.5%. So once again, thank you so much for joining, everyone. I really appreciate it. And Steve, I'll get to your question here in just a minute. Before we do that, let's just go over to the actual morning presentation here. So NVIDIA shares fall on light guidance. Snowflake also slides. So shares of NVIDIA fell more than 4% in pre-market trading the day after the California-based company issued a lighter than expected guidance for the current quarter. They guided for about $8.1 billion in revenue versus $8.54 billion. That was the expectation for the current quarter that we're in. But they also mentioned a $500 million loss in revenue because of Russia's invasion of Ukraine. So that's obviously weighing in on the company and the top line sales. And the company still beat expectations when it came down to revenue and earnings per share. They're still guiding for some decent growth on a year-over-year basis of close to 24 to 34%. But of course, because of that lighter guidance, they basically dropped after hours and pre-market this morning. They're down a little bit over 4.6%. So in my view, again, NVIDIA is a quality name. Yes, multiples have been higher. Prices have been higher for NVIDIA, but now it's coming down to some very attractive levels after that 50% drop. And considering that the earnings are growing, revenues are growing, it still is one of the quality names, in my opinion, in the semiconductor industry to own. And of course, my fair value sets are roughly in the 120s. So we'll take a look at how it trades today, how the price action behaves. And another thing to mention was NVIDIA's failed acquisition of ARM, for which they had to pay over $1.3 billion. That also kind of ate into some of the profitability from this quarter. And a gap adjusted basis, earnings basically dropped on a year-over-year basis. But when you exclude that, they reported about $1.36 per share on $8.29 billion in revenue. So let's take a look at Snowflake. So Snowflake also, I did a video on them earlier. They dropped over 14% after, once again, guiding a little bit lower and margins also decreasing. So Wall Street did not expect Snowflake to say it anticipates negative 2% adjusted operating margin for its current quarter, which may be contributing to the stock's slide. And, right now the market cap sitting roughly at $35-40 billion. I would be interested and I would take a hard look at the company at under $25 billion. So that still represents about a 30-35% downside here for the company right now. Crypto getting hammered. We'll take a look at that here shortly. So Bitcoin's now under 29,000. So just trading at 20,000, down about 4%. So we're starting to break down from this bear flag and we're starting to break down below the support. And Ethereum also at 1,700. Wow. It's down over 9%. I can't even imagine what Coinbase, Mara, some of these stocks are going to open at. So down 6% here. Let's take a look at Mara is going to be down close to 5%. Riot is down close to 4.5%. So a lot of these crypto related stocks and miner stocks are just absolutely getting hit here. Of course, Bitcoin down over 4%, just under 29,000, starting to break down below this green area rectangle and that support. But Broadcom says it plans to buy VMware for a $61 billion deal, so is one of the largest technology acquisitions in history. The company's announced Thursday morning the cash and stock transaction is valued at roughly $61 billion, based on where Broadcom shares closed Wednesday's session at $531.63. And the planned deal helps Broadcom further diversify away from its traditional business of designing and selling semiconductors into the higher margin world of enterprise software. And Broadcom, which made a multi-billion-dollar acquisition in 2018 and 2019, expects a VMware deal to close in its fiscal year 2023. And the company is currently in the third quarter of 22 right now. So that's and again a big acquisition for Broadcom and VMware as well, which basically spiked over 25-30% a couple of days ago. Then we got Morgan Stanley reiterating Apple as overweight, Evercore downgrading Dow to inline from outperform, UBS downgrades Kraft Heinz to sell. We got Jefferies reiterating Tesla as a buy, but they did lower their price target to $1,050 from $1,250 a share earlier. Bank of America reiterates Starbucks as a buy, and we also got Morgan Stanley upgrading Lululemon to overweight from equal weight, and then finally Loop reiterates McDonald's as a buy, and Stephens initiates CrowdStrike and Okta as overweight, and Cowen initiates Coinbase as outperform, and then finally they also reiterate Amazon as outperform as well. So cryptocurrencies under a lot of pressure, and next stops, technically speaking, and again, keeping it very objective here, the next technical support is going to be at roughly 20,000. So that right there is going to be that level to watch, in line with where we have previously found resistance for Bitcoin. But yeah, Ethereum just absolutely sliding here down over 9.5% to 1750. That is going to be the level to watch. And we were obviously, trading inside this kind of like this, I want to call it symmetrical triangle or a little bit of a descending triangle as well. And this big breakdown happening right now at 1700, that's going to be that next technical support level to watch for Ethereum. That's also a level that we have validated previously several times. So that is going to be that next area of support to watch for Ethereum for now. And of course, a big resistance sitting roughly at about $2,000 per share for Ethereum. So that's where we are. For cryptos, and yes, there's the sunglasses, green mic, all that stuff is common. Green mic specifically, once I personally do believe the markets have started to show signs of some type of bullish momentum or some type of a sentiment to the upside, because there's still a lot of macro headwinds that we need to deal with. But the Fed's policy pivot, now the market's starting to really expect that pivot to come in sometime in September. And we also got the biggest decline in money supply reported on May 24th. So that was a big liquidity outflow when you look at that money supply, which has been going down, over the last year. So it's going up, but now it's starting to decelerate, and it's now starting to go down. And we're now starting to see a little bit of decline here for that particular index. And on top of that, the expectation have changed. Like immediately they have flipped on Wall Street, and of course economists and market strategists, now they're thinking that the Fed might be overdoing it, and we still might get a couple of 50 basis point hikes in June and July. But what happens in and after September, I think, is going to be the big question mark for the market, and whether the Fed pivots around that time frame or not. I think that's what's going to be the real question from the market standpoint, because I think we already know 50 basis point is kind of like a given at this point for the next couple of meetings, right? That's why I don't understand like what was so different about the FOMC meeting minutes from yesterday, even though the headlines were like, oh, they're going to raise rates more than the market anticipated. No, they didn't. Like the market anticipates a 50 basis point hike over the next couple of meetings here. It's what happens in September and after is a real question from the markets and from the Fed also. So make sure that you drop a like. I would really appreciate that. And we'll get started here with the poll with less than 4 minutes left for the markets to open. So let's see where the overall sentiment is. Where's our poll, red or red? Yeah, that's been kind of like the sentiment, right? It's either red or very red. Those are probably the only two options that I should give you guys because any expectations or hope for a green day have been deteriorated over time, especially in 2022. This has been a very, very brutal bear market, to say the least. So, it's kind of like a good and bad thing, right? It's bad because this is like a really slow and steady bleed, right? In 2020, the market just went down in 2 weeks and then right back up, right? It was just like quick, like a flash crash. If you take a look at the monthly chart for the S&P 500, it was a quick flash crash, right? So people didn't really quite feel as much a pain in their portfolios as now. This bear market is like weeks, if not months, of just red downtrending, consistently selling pressure here. But that's also a good thing because, you got cheaper prices for longer. And in that March 2020 crash, it was just so quick that, by the time you get started buying, you're on your way back up, right? So by the time you get going and start dollar cost averaging at lower prices, before you know it, stocks are recovering 10, 20, 30, 40, 50%, and then stocks are running away from you. So it's kind of like a good and bad thing here. The bear market this time, what we're seeing is a slow and steady bleed, which is obviously painful to watch, but at the same time gives us the opportunity, gives us more time to accumulate and dollar cost average, if you are investing for the long term. Of course, if you don't have like a 6-month time horizon, then the markets are not going to recover that quickly, considering all the macro environment that we're in, the macro backdrop and all that. But longer term, if we're looking 3 years, 5 years, 7 years out, inflation expectations will stabilize, they will come down, and of course interest rate hikes are not going to be going on forever. So yes, historically, bear markets are much shorter than bull markets, that's for sure. Bull markets do last much longer in the years versus bear markets, which last in months. Could be 6 months, 8 months, 12 months. The average is about 12 months. So we'll see how long this bear market lasts for the markets, even though the major indices, S&P 500 and the Dow, are not in quote-unquote a bear market. Technically, the Nasdaq is in one, 30% down. A lot of stocks are already way past a bear market. They're like full-blown crash right now. So in my view, again, the aggregates may not be there, the Dow and then the S&P 500, but the overall market is pretty much. So that's, a lot of technical weakness already. So we got about a minute left. The poll here reads 55% green. We got 46% red. So yes, Lawson, example, your snowflake video today, you like the company, but still you are waiting for a bigger fall. Yes, correct. So I think, it's really important. So let's see, honest question. Yes, things have been going down for weeks, but in most of your videos, you're still saying you're waiting for more of a drop. So have the markets dropped enough? So it really depends on the stock itself, right? It really depends on specific companies. So it's not like all companies that I'm waiting for. Like I can, count 4 or 5 stocks right now that are like absolutely no-brainer deals at these prices. So it's not like I'm waiting for all companies, but there's going to be specific stocks, right? That if they drop further, then sure, they're going to be better risk-reward opportunities, right? Better pricing because of what we've talked about, right? As prices come down, risk comes down with it. And, your future return expectations go up dramatically if the prices are coming down. So that's really, what I'm waiting for specifically on individual companies. But there's a lot of companies out there that, even at these prices are absolutely, great buying opportunities in my view. Truck Confirmer says AMC. Let's see, AMD here opening down close to 2%. NVIDIA here down about 4.6%. So we'll see if we actually do break past 163, 164 again. Apple opening down 2%. We got Meta Platforms more or less flat, with Amazon up over 1%, and Tesla is just flat on the day so far. So just up over 20 basis points, trading as high as 660. And Google is also more or less flat here. So overall indices, we got a Dow opening higher, much higher, 200 points higher. We got the S&P 500 up 30 basis points, so more or less flat. And the Nasdaq opening down 23 basis points. So a little bit of a rotation away from tech and growth over to value on the day today. And let's take a look at Alibaba also. Alibaba reported earnings. They are, or should be up, so very nicely up over 5%, so just under $87. And I believe Baidu is also pushing up. So it's up close to 6% here on the day. So very, very nice move for both Alibaba and Baidu, but they still have a lot of work to do in order to recover fully. And this is going to be that area of support for Alibaba. So this right here is going to be that area of demand, that we have validated several times in the past. This was a level coming in from 2016, so about 6 years ago, and even going back as far as 2014, 2015, we validated that level before pushing right back higher. So Alex, what are some of the no-brainer stocks about this moment? I think Google is just at a tremendous value. Google, we've talked about this before, but anything closer to 2,000, 2,100, it's trading at a forward price for earnings at 18. Market cap at close to $1.3, $1.4 trillion is just tremendous value in my view for Google for the long term. So, for the growth that it has and for the price earnings multiple, it's got a very favorable PEG ratio. So it's a quality asset, great balance sheet, great prospect for continued growth. So Google is one, and then Amazon, I believe, is another one. Meta Platforms, I believe, is another one. That, these are companies that are quality companies, right? They're not going to go bankrupt, right? Plenty of cash on the balance sheet, plenty of assets on the balance sheet compared to liabilities and debt. And they can weather through the worst economic downturns, right? Even if we go to a recession, even if, unemployment does go high, and inflation is sticky or stays higher, they can weather through that. They can weather through those economic downturns and still come out on top once things start to get better and the dust settles. So these are some companies that, quality companies, have come down significantly to very, very attractive levels. And Jenta says Meta equals trash. So, again, I respect your opinion, but disagree, obviously, because Meta Platforms, I do believe, has very quality cash flows, quality revenues, quality earnings. They've grown tremendously over the last several years, if not decades. Sure, the near term looks very cloudy. The near term is, a little bit uncertain, but they are going to be able to figure that out, in my view. But that's okay. We definitely need some pushback as well on some of the stocks that I'm talking about, right? There's definitely going to be disagreement, and that's what makes the market, right? That's literally what makes the market. What I believe might be a buying opportunity, a lot of you may not agree, right? And that's exactly what's happening every minute, right? Somebody's buying the stock, on the other side, somebody's selling that stock, right? So that's what makes the market. So anyway, let's take a look here. Nvidia down about 4%, just normal red day decline, it seems. Yeah, there's not a lot of weakness for Nvidia in my view. I think Wall Street does understand exactly why they're guiding lower, and those are mostly because of those geopolitical tensions coming in. So Nvidia is getting bought up, it seems like, intraday. So there we go, big green candle, just over 165 once again, only down close to 3% here. And Google is one, just more or less flat. We got PayPal flat, Advanced Micro Devices also getting pushed higher here. And then Meta Platforms slightly down, Apple down close to 2%, and then Amazon also pushing higher, close to 2% so far, with Tesla more or less flat. So all right, let's see. Yes, so Bitcoin, 20K is going to be that next technical support that we're watching for BTC. If it obviously continues to sell off even further. Now, volatility-wise, the VIX is more or less flat. By the way, I was doing some analysis on volatility earlier, and this right here is going to be the chart for the VIX. And we have to go over to the monthly chart over here. We're going to go over to the S&P 500 here. And this is going to be the analysis on the VIX for us to look at. And what this shows is how high the volatility has basically gotten up to in all these previous corrections and bear markets and crashes. So this is about as far as I can go for the volatility, and this is from 1990. And these are three areas or three lines for the volatility that we have really tested in the past, right? So we haven't really broken out of that area. So 36 is one level. That's going to be this first red line. And then we've got 50. That's going to be that second red line. And then third is going to be 85. So that's going to be that third red line. So for VIX, those are the three levels that we really need to watch. In the 1990s, S&P basically dropped close to 20%. In a bear market, we got up to as 36. Fast forward to some other corrections and bear markets. This right here, 23% bear market in the 1998. The volatility got up to as high as 50. This right here was obviously the dot-com bubble. From peak to trough, we basically dropped 50%, but a couple times here, 24% drop, and this right here, another 34% drop. Both times the volatility was a little bit subdued, only got up to as high as 50. 50 was like the max during the dot-com bubble. We didn't see the S&P get up to over 70 or 80 or 90 levels back in the dot-com bubble. It was not up until the Great Recession of 07-08 when the VIX got up to as high as 85, even as far as like 94, right? So that was a big spike here in the VIX, jumping over 400%. And that's when we saw that big drop of 50% for the S&P 500. Then again, we resume. We only go up to 3650 levels. So you can see like these smaller red squares. We don't quite tap above that 50 level. And again, it wasn't until the March 2020 crash over here when S&P dropped to 33%. A lot of fear in the markets, and the VIX spiked over 475% again. Got up to 85, and right now we are just at these levels under 37, 36. So even though we're in almost a bear market, the volatility is pretty much consistent with what we have seen in the past, right? So it hasn't really moved higher past 45 or 50. So we'll keep a close eye on this. The next possible level could really be 50 on the volatility. And of course, if you do see some more potential selling pressure. But right now with these green candles, I don't think so. I don't think. Yes, so let's see here. Nvidia recovering very nicely. Might just close green. That's great. 169.98 is a high for the day. And yesterday's close was, I believe, at around 170. So yesterday's close was around 169.75, so roughly under 170. Look at those two green candles side by side, almost identical days for Nvidia. Just incredible. So we just went positive for Nvidia. That's incredible. So GDP numbers came out. It was a negative 1.5% print on the first quarter 22 numbers. So, that's something that we were already anticipating. I mean, the first quarter, we already got negative, 1.4%. The consensus was negative 1.3. We got negative 1.5% on the first quarter. So, it didn't surprise the markets any bit. We already did expect that numbers in the negative for the first quarter. So Kevin says 225 year-end target for NVIDIA. Yeah, I mean, it's possible. I mean, it's, sub 150 is kind of like dollar cost average price for me, but 125, 130 around those levels is like fair value for Nvidia. But of course, there's a lot of buying pressure coming in for the company, and Amazon also pushing up over 2.5% here, almost back up to 2200. Tesla not really moving all that much, but Meta Platforms more or less flat here, along with Tesla not moving all that much, and Apple is down close to 1% right now. So let's just run through our watch list, see what's actually moving and what's not moving. So we got Coinbase, Mara, they're both down pretty drastically, given how much crypto prices have sold off here. So, Bitcoin's just under 29,000, down about 4% on the day so far. And then moving forward, let's take a look here. So Trade Desk down close to 1.7, Square and Apple, they're both down about 1.5% each. Netflix coming down to 187. So, 145, 150 is going to be a level where I would be interested very much on Netflix. And then moving forward, we got Nvidia, Take-Two Interactive, flat on the day so far. Microsoft, PayPal, flat, flat, flat. Tesla slightly higher now, or just more or less flat. Upstart's up 1.5%, so back over $40. Upstart, by the way, had a really good day yesterday, right? Up over 9% on the day yesterday. And then now we're getting up to the greens. So LABU pushing up a little bit. Starbucks is up. Fiverr, Amazon, CrowdStrike. So let's take a look at some cybersecurity names here. So they're all green with the exception of Okta. Okta actually did receive an upgrade today and a reiteration from one of the banks. But Baba here up close to 9%. Baidu's up over 8%. So very nice move for some of the Chinese stocks here. InMode also pushing up over 4.7%, 4.5%. So overall, market seems to be catching on to some bids here. The Dow is up over 337 points. We got the S&P up close to 1%, and the Nasdaq's up over 69 basis points as well. So, boom, the red mic curse is broken. Maybe I'm speaking too early, but We'll see. We'll see what happens, and we'll see where we close. What do you guys think? So big money coming in. We just have to look at the flows, and we'll take a look at the volume and the flows, and then I'll do a video on the orders by Fidelity customers as well to have a good understanding of that, to see if there's any type of big orders or any whales kind of stepping in. Yes, Alex, I'm just kidding anyway. So we have to wait until the closing bell. Obviously, so anything can happen in the first 15-20 minutes, but it's really important for the markets. Where we close is far more important than where we open, right? So a lot of things can change intraday. But Tesla, for some reason, still under some pressure here. I mean, we've got AMD, Nvidia, Meta Platforms, Amazon, Google pushing higher. Tesla's a little bit under pressure, seems like, down about close to 0.5%. So, there's not really much of a momentum on the day for Tesla so far. So just trading at around 650, 655 levels for the company right now. Oh, Tesla got a downgrade. Well, Tesla got a reiteration, not really a downgrade. It just, Jeffries just lowered the price target. That's all. They just reiterated Tesla as a buy. So, they just lowered the price target from $1,250 down to $1,050. So it was a $200 price lowered, but at the same time, still reiterated the buy rating. So not really seeing a lot of momentum here. All right, Dow 30 names here. It's actually moving. All right, let's see. We got Home Depot, Nike, Pfizer, Walmart, all pushing up nicely. Walgreens is up nicely. American Express, McDonald's, 3M. Pushing up Chevron, Microsoft, Salesforce, Amgen. So Dow is pretty green. A lot of greenness in the Dow 30. Hashtag green mic for life. So year to date, energy is still the leader, 52%. 52%. So very, very strong move to the upside for XLE. And, we got all the other sectors pretty much down. Mining ETF still up over 16.9, almost 17%. And the yields have been coming down a little bit, right? 2.749% is where we are right now. And oil continues to creep up higher. So we've got Occidental, ExxonMobil, Chevron, Devon Energy, BP Shell. They're all up once again on the day. So a lot of green in the energy sector. Ethereum still in the 1,700. Bitcoin still in the $28,000 range for now. All right, let's take a look at some GME and AMC for you guys, okay? Just because I've gotten a few comments now. Wow, look at that. GameStop up 10%. Congratulations to anybody who's trading or investing in GameStop today. A very, very nice move here. So this right here is that resistance. So, we've got to 130, 131 is going to be that resistance. And AMC, let's take a look. 2.7%. So, not bad. I think yesterday was a very strong day. Also up 14%. So, right now, this is going to be that resistance to watch for AMC, roughly in the $14 range. So previous support, we are getting rejected at that level for AMC. In mode here. Did you see Steve Weiss on CNBC yesterday, Caddy? No, I did not. I didn't see that yet. So in mode, up 5%. Starting to push a little bit higher. So not bad. We're still in a downtrend though. I want to be very clear that we're still making lower highs and lower lows. So still in the context of an overall downtrend for in mode. And the resistance next is going to be at $30 per share. That's going to be right over here. Kind of in line with that previous support level to watch for in mode. Roughly in about the $31, $32. So Nvidia still down on the day, but more or less recovered for the most part 5.6% here in the first 10 minutes. And AMD also pushing higher with Google and Meta platforms. Look at that, pushing higher. It's coming. It's coming. I can promise you, Lucky, it's coming. All right. So yeah, if you have any other stocks you want me to go over, happy to do that for everybody, and we'll take a look at some individual companies, see if there's any opportunities in terms of valuations, fundamentals, how much they've sold off for the technicals. Yes, Monday the markets are closed. I believe they are closed. All right, let's take a look at, we'll start with Upstart, then we'll look at Alibaba. Let's see. So Upstart up over 2.5%, close to 2% here on the day, so 41.42. So we did see a bit of a pullback on Upstart, 33%, and now we're starting to see a little bit of recovery back higher. So next resistance, well, there is going to be a gap to fill here all the way up to $54, $55 for Upstart. And that's pretty much going to be that resistance level to watch on the company for now. So let's take a look at Alibaba here. Very strong move, up over 9.5%. So earnings were good, revenue and EPS beat on the company. So this is right here is the actual earnings. So they reported $7.95 or $1.25 per share in diluted EPS. Down a little bit from same time last year, and analysts were expecting about 7.17, and revenue came in at over 204 billion. Again, the renminbi. I struggled pronouncing that, but up from 187 billion renminbi a year earlier. Analysts were expecting about 199. So we got a nice revenue and EPS beat for the company in the fourth quarter. So nice move to the upside, but still, of course, the company's got a lot of work to do in order to recover back up to the all-time highs. And of course, there's a potential resistance here, kind of like a lower high that it's been making right now. So if you do get that nice breakout, then the next resistance would be at $103. So that would be that next resistance to watch here for Alibaba. Yeah, and yes, Alibaba from a traditional metric standpoint, definitely very, very undervalued. But there's also a lot of geopolitical risk that Alibaba has to deal with. When it comes to DigitalOcean, I think the valuation is still rich for the company. So price to sales at 10, price to cash flow at 32. So those are both multiples that are, a little bit higher. And share dilution hasn't really been there, so that's very good. When we take a look at the balance sheet, so they've got about $1.56 billion of cash, and total debt is pretty much their total liabilities at $1.46 billion. So balance sheet's good, right? They've got more cash than the liabilities and debt on the balance sheet here. And overall, obviously, they've come down dramatically from 133 down 78% or so. So, support's going to be marked at about $30, and there's going to be a very strong resistance around these areas at close to $63, $64 a share. Now, since the company doesn't have any earnings, I don't have a fair value estimate on DigitalOcean, and there's going to be another resistance to watch here at roughly $46, $47. And until it becomes profitable, we can take a further look at DigitalOcean. But until then, we'll just keep a close eye. It's just going to be on the watch list here. All right, let's take a quick look on the markets here. Wow, the Nasdaq here up 1%, S&P up 1%, the Dow is up 1%. So green candles all around for the markets here. So, all right, let me just do this. Let me ask you this. Since Monday is a holiday, Memorial Day weekend, today and tomorrow are the last trading days, and we are potentially looking to break that streak of weekly losses, right? So if we come over to the Nasdaq here, and on the week, it is expected to be higher, up over 1.81%, right? So this is going to be a break of that losing streak of 7 consecutive red weeks. The S&P 500 is also up a very nice 3% on the week, breaking that streak of losses here over the last 7 weeks. So is this going to be a green or a red week? What do you guys think? My expectation that it is going to close out at a very strong green week here. Again, tomorrow there's not really any of the economic catalysts or economic indicators that are coming out that is going to hold us back from closing this as a strong, nice green week and finally breaking that losing streak. But what do you guys think? Ooh, Lawson VK says red. Rebecca says red. So there's still a lot of expectation the market's going to turn around over the next couple of days. That really means that the S&P 500 from these levels needs to go down 3+% in the next 2 days, a day and a half pretty much, if he will close for red. Kevin says yellow. Alex says red week to set the all-time record, beating 1930 record, and he doesn't trust my perpetual optimism. Wow, look at those green candles just coming in hot. Nasdaq here, the Dow up over 409 points. A lot of individual names like Google's up 1.7, Amazon's up over 3. We got PayPal up over 1%, AMD pushing up. Now Nvidia went to 171, so turning green here. Apple also almost turning positive with Meta Platforms up close to 1%. Come on, Tesla. Tesla's up over 1.5% now. Very, very nice price, $669. It's up to $669,420. Still early in the day. Yeah, I do agree. I think it's still early in the day, and we'll see what happens remainder of the day, especially after lunch and towards the close, as a lot of the volume kind of kicks in around those times once again. Oscar, yes, I do think that this is a lot of technical, we were in very oversold conditions. So a technical rebound from these levels is something that, is very normal after 7 weeks of consistent selling. So, but we're still in the context of a bear market, right? I mean, the Nasdaq's still down 30%. The S&P not so much. I mean, it's gotten down to about 19.5%, closer to 20%, and then it hasn't really validated below, or hasn't really breached below those levels. Now, what's really interesting is the 11,000 mark, right? So one thing that I mentioned earlier last week was this 50 moving average on the monthly chart, which was by far the most important critical test for the markets. And guess what? The bulls so far, again, I don't want to jinx it. So far, they've passed that test. Flying colors, all right? Because we came down to 11,000 twice, 2 times. The markets came down to 11,000 and the bulls stepped in. Once was on last week, and the second time was we were watching the live stream together on, was it Wednesday? Was it Wednesday or was it Tuesday? I think it was Tuesday, May 24th, right? So May 24th was a Tuesday. We were watching that live together, and around 11,000 mark, that's where the bulls really started to step in again. So those were the 2 areas where we had the buyer step in here, the buyer step in here, and a very nice recovery back up. So and now you can see that we're also starting to break past this resistance here on the 30-minute time frame, 5-minute time frame, at around 11,500. So very strong move on the Nasdaq, and the bulls really stepping in around that 50 EMA on the monthly chart, which is still holding on to that trend, the 14-year long trend for the Nasdaq. So it was a very important technical week. It still is. It's not over until it's over. So we're going to still keep a close eye at around that 50 EMA 11,000 mark on the Nasdaq. And of course, the S&P came down to that fib level, 3,800. Perfect validation. I mean, the low for this candle is 3,810, right? It was just such an insane validation before pushing right back up this week. So 2 really important technicals getting validated on both the Nasdaq and the S&P 500. Yes, so Randall, I think, brings up a great point, and I think that's really goes to show, the logical thinking about the market sentiment. Randall says, NVIDIA trend today shows something different. It's green despite not meeting Wall Street expectations. And I think that's really important for us to consider because in the past, well, here's the thing, right, about the markets. If super bullish news fails to bring the markets higher or fails to make the markets green, that means the trend is really bearish. If super bearish news or negative news fails to make the markets drop, that means the trend is very bullish. And what we're seeing right now is from NVIDIA's earnings. And, in the past, if you kind of go back to the earnings season, it's not like all companies reported bad numbers. Some companies reported great numbers, right? We had AMD, we had Tesla, we had Google, we had Apple. Some companies reported some fantastic numbers, and yet that wasn't enough because we were in an overall downtrending pattern, right? We were very, very weak from a technical standpoint. Nobody wanted anything to do with equities, and people just wanted to, sell out of pretty much all asset classes. But I think today's NVIDIA earnings not being able to meet expectations on a future guidance standpoint, which is a pretty big deal. I mean, NVIDIA guided for 8.1 billion, and the expectations were 8.54 billion. That's a pretty big miss, right, on a forward guidance standpoint. But yet, even that is not enough to hold the markets down today, or even NVIDIA for that matter. It is green on the day, right? It's up over 65 basis points. So that really speaks volume in terms of the trend, which, starts to really, be a little bit different. We also heard from the insiders, right? So we covered a report yesterday and how they're the ones that are starting to really flip the switch from being net sellers to being net buyers now in this market. And there's just been a lot of indicators pointing to some technical oversold areas where the sentiment has been so bearish, and now we're starting to see some buyers really step in. Now, is this gonna materialize into something bigger, like a bigger rally back up to all-time highs? That is still yet to be seen. But as I pointed out, we're still in the context of a downtrend. We're still in a bear market, lower highs and lower lows. So we need to at least get up to that lower high, and then we'll see if we can break out from that lower high and change that direction back up to higher highs and higher lows. So yeah. So, Caddy, did you buy some Tesla? No, I did not. I have not yet picked up Tesla. Well, I do have a small position, but I haven't really dollar cost averaged on Tesla just yet. Came down to 620s, but I have not. So yeah, very, very, so far, a decent move here in the markets overall, with lots of stocks pushing up very nicely. But again, we'll see what happens towards the end of the day, right? Markets can be very strong intraday and even at the open, and then absolutely collapse towards the last 2 hours. So too early for us to make any decisions here. SPY back over 400 is a big deal. Psychic level. Yeah, SPY back over $402. A very, very strong move back to the upside. I think there's a couple things that have changed, right, materially. So, going back to our logical explanation of what has changed over the last 24, 48, 72 hours. And I think the market's expectation of Fed hikes has dramatically changed because there's been some indicators, right, apart from Bostic's speech and saying that there's going to be a pause in the rate hike starting September. There's been other indicators as well that are pointing to a little bit of a Fed pivot after the couple rate hikes that we're going through. I think the market's still priced in 50 basis points for the next 2 to 3 meetings, June, July, and September. But then what happens after that in November and December? I think that's where the big pivot comes in. And Q4 could be the time where we see some dramatic moves in the markets to the upside. Summer could still be a little bit volatile, could still be a little bit of back and forth and could be rough from that perspective as we kind of digest those rate hikes in June and July. But then after that, I think is going to be more visibility, more clarity for the markets to rally higher. Right now, it's a lot of uncertainty as well, right? Uncertainty is the evil of the markets, especially on an institutional side, right? Last thing you want is any type of uncertainty about the future. But anyway, so that is going to be it from me, you guys. A little bit of a shorter live stream today, but markets here definitely pushing higher very nicely. We've got, NASDAQ up over 1.5%. We had a trade idea on TQQQ last week that I posted on the weekend. So this right here is our trade idea. $26 was the entry around those levels. And if you take a look at the daily chart here, we got down to as low as about 26 or 25.50 around those levels. And the stop was below $25. So very, very nice move in TQQQ. If you are in our Discord, I will send out an update to you. We already do have a price target on for this, and there were two different ideas, a swing trade and a call option idea. So again, if you want to get access to all those, the buy and sell alerts, options alerts, and of course trade ideas like these, the link's going to be down in the description below. So once again, thank you so much for joining, everyone. I really appreciate it. Boba, thoughts on Square short term? Let's take a quick look. So Square here is just trading at around that support at close to $74, $75, right? It still trades at a little bit of a higher multiple from a valuation perspective, but I wouldn't be surprised given the market now starting to churn a little bit. I wouldn't be surprised if it does get back up to $80, $85 per share, because that is going to be around that support here for Square. So once again, thank you so much, everyone. Really appreciate it. As always, make sure that you drop a like, subscribe, and the link to our Discord down in the description below. Happy investing. Hope you guys have a great day. I'll see you guys first thing tomorrow morning for another live stream and to wrap up this entire week.